Hello, everyone. This is Dr. Duru with the Market Breadth working for Ahan Analytics. Want to do a quick review of the action on Wednesday, September 18th. It was supposed to be a really big day. The Fed finally cut interest rates, ended a tightening cycle, but the day was a little anticlimactic, as I guess should have been expected given this date was so highly anticipated. And I want to go through some quick signals, and it's going to be a weird kind of review because the day closed on a bearish note, but as I am recording this, the current indicators going into the next session Thursday are looking bullish. And I suspect we're going to see a lot of this kind of seesaw action that's going to whipsaw a lot of short-term traders. So we're going to have to pay close attention at the same time we sort of pan back and keep the bigger picture in mind. So what you're looking at here is SwingTradeBot. I'm just doing a quick review of the different signals. As you all probably know by now, I am a subscriber and big fan. And I want to show the recap because it is full of bearish signals. And this is because traders faded stocks into the close. So you see the shooting star candlestick, stochastic sell signal, um, lizard bearish, which I actually don't use, but doji bearish, on and on and on. So there are a lot of bearish signals. And for me, as the with the market breadth, the most important bearish signal was this, the percentage of stocks trading above their 50-day moving average. You can find this on TradingView with MMFI. As a reminder, I call this AT50 for above the 50-day moving average. And as you can see here with this candle, let me zoom in so make sure you can see it. The At the highs of the day, it was very bullish. It went right to the overbought threshold, which is 70%. So this at this line, 70% of stocks are above their 50-day moving averages, and then it faded backwards. Now, according to my short-term trading rules, what I call the AT50 trading rules, this is bearish. This is very bearish, actually. And this was a successful bearish signal here, and it was a successful bearish signal around here. And of course, each time the bearish cycle did not last long, and that's been because we've been in an overall bullish market, so we don't expect bearish cycles to last that long. But regardless, each time, well, I should say each time, the last two times this thing failed at the overbought threshold, it resulted in bearish trading conditions for at least a few days and as long as a week. This was the big September drawdown. So I mention that because, I went into this thinking, oh, I'm going to talk bearish about the stock market. However, and this is something that I encourage short-term traders to pay attention to, is the currency market. And as some of you may know, the carry trade has been really big on people's minds. The carry trade has been supported by a weak yen. And when the yen strengthened here in particular, it caused the market all sorts of problems at the tail end of this plunge. It also helped to cause the market problems at the beginning of September. And now we're rebounding yet again. So we're in this rebound cycle, and this must be respected by the bears. And this is the candle as I speak now. This is again post-market. So this is telling me that the market is actually going to be strong at Thursday's open. And just to support this claim, let's take a look at CNBC so we can see the pre-market futures. And sure enough, futures are up nicely, especially for the NASDAQ. Even oil is up 1%. So, we might have a strong open. Now, this is interesting that we could have a strong open because, and I'm going to have to go intraday on you here. Let's look at the 15-minute chart. And you could see all of the market churning. So here is the Fed rolls out its policy decision, which was a 50 basis rate cut. As I've written in my post at drduru.com/122, all one word. the market was pretty much evenly split, at least at the end of last week, between 25 and 50 basis points cut. So that meant that half the market would be disappointed, half the market might be surprised, or half the market might be pleased, and half the market might be disappointed, depending upon how you want to interpret the 50-50 split. So, of course, when the 50 basis point news came out, market celebrated because, rate cuts are supposed to be good for the market. And that lasted for 30 minutes. And then Powell came onto the stage. And of course, now the sellers come out, sell the news. The buyers tried to recapture the momentum. And then bam, the sellers took over for the last 30 minutes of the day. These are people who are thinking, okay, this is truly sell the news time. And all of the gains coming into the highly anticipated news are at risk. So you have a lot of people bailing. Let me go back out to the daily here. And the other thing I just want to note is that it's also, while this fade looks like a doji evening star, and again, it's bearish and it confirms the bearish signal that I just showed with AT50. It's even more bearish because it happened right at these highs and it's making it look like triple top is in form. So if somehow the market opens even lower here, then we're going to want to be very careful. But still, this 50-day moving average is uptrending, so you can't get overly bearish, at least until this gets broken again. If the market opens up like it seems like it's going to do, then it's could be a stampede of buyers, because once bearish signals are invalidated, it means that the sellers have been fully exhausted and are no longer in the way of the buyers. So, watch out if we open up on Thursday. Let's take a look at the NASDAQ. I think same thing here. Actually, the NASDAQ's problem is that it's not even close to the all-time high. So we're not even talking about a double top. We're talking about struggling against a potential downtrend from the all-time high. So NASDAQ is actually getting close to confirming a bearish signal because it's so close to its 50-day moving average support. And then, of course, we have the small caps. Small caps have been the dominant factor in market breadth. And you can see here it broke out above the last high, only to fade right back to a flat close. So that was pretty bad trading action. But as I've written about in my blog, I want to get long IWM calls at some point. I am long shares. So, we'll see what happens. Let's take a look at the VIX. Despite all the churning, the VIX actually closed down on the day. So this, I just assume, is just relief from now knowing what the news is. Now, let's take a look at some individual stocks. We know NVIDIA has captured the market's hearts and minds and sentiment. NVIDIA confirmed a 50-day moving average breakdown. So again, like I said, I came into this session, this video, thinking I was going to be all bearish on the market because NVIDIA is in a bearish position. Actually, you could see down here already, pre-market, it says that NVIDIA is going to gap up, back up above the 50-day moving average. So let's see if that's what happens in the open. Apple also caught my interest as another big cap. And Apple's a trip because, it opened up. There's a lot of bearish talk about iPhone sales. It gapped down. What was this loss? About 3%. And now suddenly people are hopping all over and saying, hey, no, Apple's great. I'm talking about the analysts. So, again, we'll see what happens. But Apple's still in a bearish position here as long as it's below the 50-day moving average. And if it goes above, then guess what? It's back to bullish. The last thing I want to show is, and I am, let's see, having a brain fog. No, I think that's it. That's all I want to show. Let's go ahead and wrap this up because, like I said, things are going to potentially be very volatile intraday. Oh, I know. I forgot. Of course, I got to do some commentary on the Fed. So just really quickly, I watched the Fed. I probably need to go back and watch some of the QA. But I watched most of the press conference, and my impression is that Powell actually did a very good job explaining why the 50 basis point cut was necessary. Actually, let me put the backdrop as my favorite technical indicator. And actually, also, let me change this to a regular scale so you can see it better. Anyway, I thought Powell did a good job. It actually made sense. The 50 basis point cut, the Fed wants to get to the neutral rate, whatever that neutral rate is. They're not worried about the economy. They do acknowledge that the labor market is getting weaker. The forecast is for unemployment to get to 4.4%, but then stay there. So that's not much of a deterioration. The GDP forecast remains strong. So, the Fed's not worried. Of course, we always have to take these forecasts with a grain of salt. So there are going to be a lot of people are going to say, hey, the Fed must know something, or the Fed is terrified about what's coming because it cut 50 basis points instead of 25. I don't think that's the interpretation to get. And in fact, if you look at interest rates in response to what the Fed did, look at this. TLT went down. This means long-term interest rates went up. That means that some of the bond folks are saying, hey, we got a little carried away, getting scared about what was coming for the economy, buying up bonds and driving rates lower. So, let's keep an eye on bonds because the bond market is going to be our good tell for what the financial market may face in the short term. And by the way, I bought some TLT puts just for this particular potential scenario. You can see I've drawn a lot of technicals here. I won't review all of the details here, but I think there's a new trading range. And right here, close to 101, 100 and a half, I figured that this was the top. It broke out only to come back down. So anyway, I bought puts, but it was more just as a contrarian play. So far, so good. But let's see how much further the bond folks are willing to take this. So anyway, so think about the 25 basis point cut scenario, which, I thought that's what the Fed should do. But in retrospect, I'm thinking that, that could have spooked the market because people would think that the Fed is moving too slowly to normalize. And the big catchword, if Powell is good at these sound bites, is recalibrate. He talked about recalibrating monetary policy based on, as he didn't say it explicitly, but based on the success in getting inflation back down. And the Fed is now saying, hey, they are confident in the direction of inflation. Now, the bond market may have something else to say about that because if the bond market starts betting on a stronger economy uh, in the coming months or quarters, then we probably aren't going to see much more rollbacks in inflation because strong economic growth could keep inflation right where it is. So again, that's a problem or a worry for somewhere further down the line. So anyway, so that's my read on the Fed. I tried not to forecast what the Fed was going to do going into it. And now I don't really want to forecast how the market's going to respond because there are many different narratives that people can draw out of what the Fed did and said. And of course, the Fed heads will be rolling out their own speeches in coming days. And the market is going to bounce back and forth based on every last word and slicing and dicing and looking between the lines and the dots and the dotting the I's and the crossing the T's, on and on and on it's going to go. Try not to get caught up in all that noise. Keep your eye on the trends, keep your eye on the technicals. And of course, don't forget that this is an election year. So that's going to add potentially some additional surprises to the upside and to the downside. All right. So, oh, look at that. Gold also may have topped out. I'll save that for my blog this weekend. So anyway, so that's it for now. And if you're not a subscriber, please subscribe to the channel. That helps get out the word to more people. Smash the like button, of course. That helps the algorithm know that this content is something that people should be checking out. And if you have any questions, feel free to put them in the comments and I will respond to them as soon as possible. In case anyone's wondering, I'm wearing this beanie here because I went to the Stanford soccer game, men's soccer game, and they were handing out these beanies. It was a great game. Stanford won 1-0 in the last 5 minutes. And hey, I love soccer. I wish I was still playing, but my knees didn't allow me to. That's a story for another day. Thanks, everybody, for checking this out. And I will see you the next time. Again, go to the blog for more details. This is a midweek update and summary. Take it easy.